Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. Good afternoon, sir. Welcome to our presentations titled Analysis of Accounting Theory Implementation for Financial Information Requirements in MSMEs, a case study of mirror barbershops. Next. So this study was conducted by Group 3, consisting of Tika, Okta, Yolanda, Nurul Inayah, Indah, Salsabila, Oksalima, and the last one is Annisa, Putri, Ardelia. So in these presentations, we will discuss 5 main chapters. The first one is introductions, and the second one is methodology, third one is result, fourth one is discussion, and the last one is conclusions and recommendations. Now, let's begin with the first chapters. To begin our presentations, I would like to invite Nurul Inayah to deliver the introduction, which will provide the background, problem statements, and objective of our studies. For Nurul, the screen is yours.
Okay, thank you, Indah, for the opportunity. Okay, first I would like to explain the background of our research. First is the micro, small, and medium enterprises, or SMEs as short, segment is considered as one of the backbone of the Indonesia economic, which plays a huge role to enhance the economic conditions. There are several roles of SMEs, if we according to the Bank Indonesia. There are absorbing a large workforce. The second one, capability to empower the local materials. And the third one, produce needs of the public at affordable prices. Next. There are several issues in MSMEs regarding the financial recording. There are first, many MSMEs do not apply the proper accounting practices in their operations, and then lack of understanding of financial reporting, and the last one, accounting is often seen as complicated or unnecessary. Next. Okay, the objective of our research is to examine the quality of financial reporting and also the application of accounting theory at the Mirror Barbershop. And the study aims to provide the useful recommendation for improving financial reporting practices, also in line with applicable accounting standards. It focuses on evaluating the barbershop's accounting methods and comparing them with standard practices. As stated by Benjamin in 1990, argues that the weakness of MSMEs in preparing financial reports is partly due to the low level of education and also the lack of understanding of financial accounting standards. And while Muntoro states in 1990, argues that the low preparation of financial reports is due to the absence of regulations that require the preparation of financial report for MSMEs. Next. But here I would like to explain SAK EMKM, which is the standard that is made a lot more simpler because it regulates common transaction carried out by EMKM and the basis of measurement, which is purely using the historical cost, so that EMKM only record its assets and liabilities at cost. And SAK EMKM is all effective as of per January 1st in 2018, and early implementation is also permitted. While the existence of SAK EMKM, MSMEs must be able to adapt and also develop the appropriate strategies in facing increasingly competitive business environments, one of which is through high-quality financial reporting, as stated by Sri Mulyani in 2014. Next. Okay, here we have problem formulation. How are financial transactions recorded and managed? How well is accounting theory understood and applied? And then what obstacle exists in preparing and using financial reports? The fourth one, how useful is the current financial information for decision making? And the last one, what strategies can improve financial information quality and usability? And for the research purpose, the first describe financial management and recording practices. The second one assess understanding and application of accounting theory. The third one identify the challenges in preparing and also using the financial reports. And the fourth one evaluate the usefulness of financial information for decision making. And the last one recommend ways to improve financial information and business performance in Mirror Barbershop. Next. Next, we have research benefits here. We divided into two for the researchers and for Barbershop. For researchers, this research providing empirical insight into accounting practices and then contributes to the development of academic research based on local business practice, particularly among MSMEs. And the third one, advancing the development of accounting theory. The last one offers direct experience in examining how the accounting theory is applied in practices, particularly in the MSME sector. And for the barbershop, there are benefits like enhancing the financial reporting practices in the Mirror Barbershop, and then supporting informed business decisions, and also encouraging compliance with the financial standards, and also helps the Mirror Barbershop identify the main challenges in the preparing of financial report. Okay, for the next one is methodology. I would give it back to moderator.
Okay, thank you so much for Nurul for the clear introductions. So next we'll move to the methodology will be presented by Annisa, Putri, Ardelia. The time is yours.
Okay, thank you, moderator. I will explain to you about the methodology. This is provide the method and how we analyze the data. So the first is research design. This research used a qualitative design with a case study approach on one of the MSMEs in Padang. Qualitative research also respond to the hows and whys instead of how much or how many. And the research process that we use is first step is problem identification, data collection planning, data collection as interview, and the fourth analyze data and interpretation, and the five is conclusion and recommendation, and the last is reporting. So the next is research method. In this study, we selected Mirror Barbershop, a small service-based business that fall within the MSME category, as the research subject. Primary data was obtained through direct interview with the business owner. Mirror Barbershop was chosen because despite having several employees and a structured operational flow, it still lacks formal accounting record. And for the objective of this study is to analyze the current financial recording method used by Mirror Barbershop and to explore how accounting principle can enhance financial management within the business. So data collection planning was conducted through structured interview with the owner of Mirror Barbershop. Prior to that, exploratory observations were carried out at several MSMEs in the barbershop industry to understand operational patterns and gain permission for data access. After selecting Mirror Barbershop as the case subject, a set of targeted interview questions was designed to explore key aspects of the business, including operation, challenges, and opportunity for improvement. And the question interview category. For the first is MSME profile, like we use this question: what is the full name of the business owner? In which year was Mirror Barbershop established? What industry sector? How many employees? What is the legal form of your business? And describe your daily operation workflow, and many others. And the second is about equity. We ask the question like how much initial capital was invested in the business, what was the source of this capital, what type of financial record are maintained, how are financial record organized and prepared, how own the business, how are profit managed. And the third is asset, like question what type of asset does the business own, how are large asset acquired, how is asset depreciation tracked, and how is asset value recorded, and many others. So for the liability, we use question: does Mirror Barbershop currently any debt or liabilities? If there were past debt, where did they come from? Like from family, bank, and lenders. And what were the borrower fund used for equipment or renovation? And how long was the repayment period, and how was it paid back? And was there any written agreement or documentation? How were the debt recorded or tracked? So the next is revenue and expense. For the revenue, we use what type of income does Mirror Barbershop earn? Beside haircutting, are there other services or product that generate income? When are sales transaction recorded? How are price or makeup for service determined? And what is the typical workflow or service process in the barbershop? Are profit from different service checked separately? And for the expenses, the question is what routine and non-routine payment does Mirror Barbershop make? How is the payroll system managed? How and when is the employee salary recorded? And the last is how is the venue rental paid and recorded? Okay, that's all for me. I will give it to moderator.
Okay, thank you so much for Annisa for your explanations about our methodology. So now let's process to the research results. This section will be presented by myself, who will describe the finding from our case study at Mirror Barbershops. So in this section, we present the results of our research based on interviews and observations at Mirror Barbershops and MSMEs located in Padang, West Sumatra. So we will cover several key aspects, including the business profile, equity, asset, liabilities, and revenue, and followed by a brief data analysis. So the first one is MSME profile, or our company MSME's profile. So Mirror Barbershop was founded in 2021 by Mr. Oksas. It operates in the personal care services industry, specifically providing haircut, styling, and grooming. And this MSME has 4 employees who manage day-to-day operations and customer service. And the workflow starts from welcoming clients, consulting undesired haircut or style, and then the performing haircut or grooming, and the last one is ensuring customer certifications. And the main goals of the business is to deliver high quality personal care services in a consistent and professional manners. Next, please. Next, please. Okay, the second one is the answer from our curiosity about the equity. So the owner of Mirror Barbershop initially invested around 70 million, which is scam interleaf from his personal savings. And financial reports are maintained manually in a notebook and typically include daily income from services, regular expenses such as supplies, and utility bills and other operational costs. And the business is operated as a sole proprietorship, which the owner choosing the retain full responsibility and independence, though remaining open to future collaboration if aligned with the long-term goals. And their profit are managed in two ways. The first one is a portion is reinvested into the business for maintenance, upgrades, and purchasing supplies, and while the rest is used as the owner's personal incomes. And next. And then this our answer from about their asset. So Mirror Barbershop owns various assets such as barber chairs, mirrors, clippers, scissors, and other grooming tools used daily, and larger assets are acquired using either business profit or personal savings, depending on financial conditions. And asset tracking is done manually, and depreciation is not yet calculated in detail. And asset values are recorded at purchase price in a notebook, and no asset have been sold or discarded so far. And inventory like hair product and supplies is tracked manually and checked weekly. It is a value based on the purchase cost method. And then there's about liability. Mirror Barbershop has small-scale liabilities related to the past equipment purchases used for setting up the business. These debts were acquired through a loan from family members, and the borrowed funds were mainly used to purchase barber chairs, clippers, and mirrors. The repayment of this loan is done monthly over a 3 months period, and there is no formal written agreement for the loan because as it was based on a mutual trust with the family members. Okay, next. And then there is about revenue. Mirror Barbershop earns its main income from hair cutting service, which is the core of its operations. Occasionally, it also receives income from hair dyeing services upon customer requests, and sale transactions are recorded immediately after the service is complete, with a payment received afterward and not manually in a book. And pricing is fixed with a standard haircut price 35,000 rupiah, and profit are not recorded separately by service type. All daily income is grouped together in a single record. So next. So there's about expenses. So routine expense for Mirror Barbershop include like rent, employees' wage, utility bills like electricity and water, and like Wi-Fi and internet. And non-routine expenses involve equipment repairs or restocking hair products when necessary. And the employee is paid a monthly salary of around 1.5 million. And although there is no official documentation or payroll system in place, the venue rental fee is paid once a year directly to the landlord, but this payment is also not recorded in any formal system. Next. And then we present things about our data analysis and interpretations. So Mirror Barbershop was established in 2021 by 3 Oksas with an initial capital of around 70 millions. And fully sourced from personal saving. And this capital was used to purchase essential barber equipment, and the shop offer grooming services with a fixed haircut price of 3,500 rupiah per customers. In terms of financial management, all records are kept manually in a notebook. This includes daily income as well as operational expenses such as supplies, utilities, and rent. and the business assets are recorded based on purchase value, and there is no depreciation or asset disposal recorded, and inventory such as hair products is also tracked manually and value at purchase cost with weekly stock check performed by the staff or from the owners. Next. However, our analysis also reveals several weaknesses in the financial practices of Mira Barbershop, and the business reserve short-term interest-free loan from a family member, although repaid monthly. There is no formal agreements or documentations for the transactions, and the payroll, which is around 1.5 million per month, as well as rent payments, are also made without proper documentation, which reduce financial transparency. More critically, the business experienced internal fraud. Some employees failed to report actual income and use business funds for personal purposes due to the lack of receipts, oversight, and formal tracking, and it has become difficult to determine the business true financial condition, especially in terms of revenue and inventory. And this finding highlights the urgent need for better internal controls, financial documentation, and the adaptation of basic accounting system to protect the business and ensure sustainability. And that's all from my presentations. Next, we'll move to the discussion. To deepen our understanding, we now continue with the discussion sections, which will be explained by Tika, Okta, Yolanda. For Tika, the time is yours.
Okay, the next is discussion. Okay, in discussion, we compare between in barbershop, finding in barbershop with the accounting theory. So it is finding has been explained by Indah before. Next. Okay, the comparison to accounting theory for equity is a residual right to asset after deducting liability. The assumption of an accounting entity requires that equity must be recorded separately to ensure proper representation and meet the qualitative characteristic of initial information. In addition, SFAC number 1 states that primary objective of initial reporting is to provide information that is useful to investor, creditor, and other in making rational economic decisions. Next. Okay, it is the finding in Mirror Barbershop for asset. Next. And the comparison to theory accounting. According to ESB, assets are defined as resources controlled by entity arising from the past transaction and expected to provide economic benefit in the future. Furthermore, assets must also be recorded separately between the entity and its owner. Assets can be measured using historical cost, which is the basis for the initial recognition of asset because it is considered objective and reliable. Yes, 16 made the recording of depreciation. Depreciation should be recorded in order to reflect or indicate the systematic decrease in the asset value over the useful life, and is recorded by generally accepted accounting principle. Next. So in its liability in barbershop. Next. And the comparison is the ESB framework define the liability as a present obligation on the entity as a result from past event, with the settlement that is expected to result in the outflow from the entity of resources embodying economic benefit. Based on ESB framework, paragraph 82, it shall be recognized when future economic benefit associated with the item that will flow to or from the entity. And the item can be measured really with the existence of cost or value. Under IFRS, liability are most likely using measurement method or historical cost. And fair value is used on the initial measurement or transaction according to ES on and IFRS. Next. So it is revenue in the barbershop. Next. For revenue in accounting theory, according to ES 18, define revenue as the gross inflow of economic benefit throughout the period generated during ordinary activity of an entity when such inflow result in increase in equity, including increase relating to contribution from equity participant. IFRS define revenue as inflow or other achievement of asset offset or settlement from its liability from delivery, producing or manufacturing goods, and rendering service or any other activity that compare the entity continuous major or center operation. The recognition criteria of revenue are based on the measurability of value of asset, transaction access, and substantial completion of process of earning. ESB action state that revenue is to be measured at fair value of the consideration received or receivable. Next. This for expand in barbershop has been explained by Indah before. Next. For expand, according to FESB, expand are the decrease in economic benefit throughout the accounting period in the form of outflow or depletion of asset of any increment of liability that result in decrease in equity. Expand will be recognized when it is probable that any future economic benefit associated with the item will flow to or from the entity and the item consists of value or cost that can be measured reliably. Based on this, the value of the representation asset are measured in many ways, like cost model or valuation model. And also for several depreciation options like straight line, the allocation of expense recognized matching concept where expense are recognized in the income statement on the basis of a direct association between incurred cost and earning of specific item of income. Next. Okay, this is a result of comparison between Mirror Barbershop and the accounting theory. Based on a finding, Mirror Barbershop demonstrate a strong application of the sole proportionate proportionship model. The equity practice align with generally accepted accounting concept as the owner assume full responsibility and separate business equity from personal finance. However, while SFAC number 1 emphasizes that financial report shall support decision by investor and creditor, this is less relevant for MSMEs like Mirror Barbershop, which typically operate via former investor or leader. And in terms of asset, the barbershop record purchase as historical cost, which align with the accounting principle but does not apply depreciation according to GAAP and ESP. Recruitment. Next. And regarding liability, the business met the basic definition provided by the ESB, but the lack formal documentation as a loan and as loan are informal and interest-free, typically borrowed from family. And the for revenue is recorded daily after service as complete, in line with the accrual basis and US standard. However, the recording of expenses lacks structure and formality, meaning it does not fully meet the requirement outlined by EFSB and ESB framework. Overall, Mirror Barbershop reflects the key accounting concept in principle, but the informal nature of its practice limit full compliance with the formal standard. Next. Okay, that's all for me.
Okay. Thank you. Thank you, Tika, for the detailed discussions. Now we come to the final chapter. Let me invite Nurul to present the conclusion and recommendation based on our research. Nurul, please proceed.
Okay, after all of the explanation previously, we can conclude that this project reveals that Mirror Barbershop, like many MSMEs, lacks formal financial management practices despite understanding their importance. The business used manual records and doesn't fully apply the accounting principles like asset depreciations and also income classifications, or even the proper documentation is not required of expenses and also the liabilities. So this reflects a broader issue where the theoretical accounting concepts are not yet effectively or fully implemented at the MSME level. As a result, the quality of financial information remains limited, which can hinder business decision-making and also the long-term growth. Next. Okay, next we have the recommendations for the Mirror Barbershop to support the MSMEs like Mirror Barbershop in improving the financial practices. These are the following actions that are recommended. The first one is Andalas University may provide basic accounting training and mentorship by holding like simple workshops and assigning students to assist MSMEs. Business owners can learn how to keep proper records and understand the basic financial concepts and apply them in the daily operations. The second one, Mirror Barbershop should start using the easy digital tools, free or low-cost apps, let's say Excel or even spreadsheets, may help to track income, expenses, and also inventory without needing the advanced knowledge. And the last one, encourage learning from others and online resources. MSME owner can benefit from peer sharing with other small businesses and use online videos or tutorials to build the financial skills at their own pace. Okay, these are the documentations of the Mirror Barbershop. Okay, that's all from me. I will give it back to the moderator.
Okay, thank you, Nurul, and thank you to all presenters. And that concludes our video presentations on analysis of accounting theory implementation for financial information requirement in MSMEs, a case study of Mirror Barbershops. We hope this presentation has provided valuable insight into the importance of accounting theory in supporting financial information for MSMEs. On behalf of Group 3, I would like to thank you for watching and giving your time and attentions. And that's all from us, and have a great day. Assalamualaikum warahmatullahi wabarakatuh.